Good morning. I'm Pete Najarian. This is The Take on this Thursday morning, a very active morning for the markets and for all of us here at Market Rebellion as we've got RebelCon down here in Dallas and enjoying some unbelievably warm weather and great weather, great golf yesterday, great opportunity to talk to a lot of people about the markets and what we are seeing. And of course, with yesterday, it was all about the Fed. We started off the day very strong. The Fed came out. Very interesting reaction in the market after jostling around a little bit of a pop to the upside, and then they just started selling. And when they sell this market, they being everyone, it felt like 520 points to the downside for the Dow. We were down about 200 points on the NASDAQ. That's nearly becoming closer and closer to a 2% move, a 1.8% move for the NASDAQ. Really just getting slammed yesterday across the board. And of course, one of the things that we talk about oftentimes, yesterday we talked for a long time about that 2-year, pushing at that 4% level. Obviously, the Fed affecting a lot of how people are viewing these rates and the treasuries, and some of the movement that we are seeing there. 10-year, right around 355. I'll tell you what, nat gas kind of finds itself in this little bit of an area now where we're just underneath 8. And the same thing about crude. Crude not really moving around as much as it was. Right around 83 and a half is about where we finished up yesterday. With volatility near 28, you've got that VXN, the volatility of the NASDAQ, close to that 34 level. So it really was a very, very action-packed, incredible day. Now, who was really getting hit the hardest yesterday? Consumer discretion, that's who. Over 2%, about 2.3% to the downside. It was names like Tesla and Amazon, of course, leading with that massive size. And then you get multi-percentage moves to the downside. They are going to pull on things. There's no doubt about that. You have the communication space down about 2.3%. That was Snap. That was Twitter. That was Pinterest, all the usual suspects. Materials. Now, that one was pretty interesting as well, down more than 2%. You're hearing a theme here, down 2% being that theme. And we're looking at names like Freeport Mac. That was down 5.5%. Then look at U.S. Steel. That was getting slammed. So the material space definitely under pressure, along with financials down 2.1%. That was led by Wells Fargo, Morgan Stanley. Then we had J.P. Morgan, of course, contributing as well. Everything, and I'm talking about everything. The best performer yesterday was actually energy, and it was down 1.5%. So that gives you a little bit of an idea. You've got Occidental and names like Devon and Marathon and throw in a little bit of Chevron, but there were some spots out there that were pretty strong, actually. You look over, you see a Kellogg, you see a Kraft Heinz. Obviously, we talked about this yesterday, but GIS, Minnesota company, General Mills, had a very, very nice day post-earnings. And so not everything was being sold off, but certainly just about everything in every sector getting sold to the downside yesterday. Now, today, a little bit more calm, a little bit of pressure on the markets, down anywhere between on the Dow 60 and about 100 points. Early on in this first hour of trade. Then you get over the NASDAQ, down a little bit more so than that. As a matter of fact, the NASDAQ definitely taking the brunt because the NASDAQ down anywhere between, call it 60 and about 110 points to the downside, at least in this first hour early on. Crude, not far from where it was yesterday at 83 and a half. Then I look over at the volatility index at about 28. The VXN still right around that 34 level, but it's the 2-year. We've been talking about this for a while now. You look at the 2-year, 4.1. You look over at the 10-year. Yeah, we're looking at over 3.6 now. So that move to the upside, it's been steady, it's been consistent, and we've been watching this move for a number of weeks now where we've just been edging a little bit higher with very few pullback days. We're seeing exactly that today. Post-Fed, where we had a pretty decent jump in that 10-year as well. Bitcoin, right around that 19,000 level. We've got consumer discretion down about 1.5%. You got financials down about 1%. You got industrials down about 1%. You've got technology down close to 1%. Energy, actually in positive territory. So we do have something in positive territory today. Energy up about 0.5%, not able to really balance out what we're seeing in terms of that bit of a push across most of the sectors early on. Names like Lilly and Merck and Bristol Myers, very strong today. You also have a little bit of strength coming from Valero, a little bit from Chevron, a little bit from Salesforce, but you also have a lot of selling in some of those casino names, also a Live Nation. But with casino, I see something like a Caesars, and also when you start to see some of those bigger market cap names in other areas like the semiconductors, look at NVIDIA getting hit pretty hard, Starbucks getting hit pretty hard, Airbnb, throw in a Lucid under some pressure. You can understand what we are seeing in the markets right now. Not huge selling, nothing like yesterday yet, but it just has that feel of a market that having a very difficult time finding a direction to be able to go back north after what was delivered after the Fed moves, and some of the commentary from Chair Powell might have got people a little bit spooked. We'll see how long lasting those words will be. So Luminar is our unusual action of the day, and I'll tell you what. This is a name that it had a really nice run to the upside. Now it's pulled back a little bit. We're talking about sensors in the auto parts world, but the stock was even higher than it is now because of some of that extra pressure. But the stock underneath $9, it was about $8.80. It's probably a little bit closer to $8 right now, but very inexpensive options. And it gives you a week and a day for these to perform. September 30th, 18,000 of the September 30th, 9.5 calls. So it would have to get a recovery and then a little bit of a move. And we've got, call it 6 trading days for that to happen. 6.5 probably, actually. Those options were going for about 24 cents. So not terribly expensive, probably a little bit cheaper now because that stock is pulled back. But will this particular name be able to make that kind of a recovery? We'll see. It does have a little bit of time. Not a lot of time, but a little bit of time. And that time frame is always, always so important. Always know that, because when you are trading options, you want to have that knowledge. And if you don't, you need to be educated. But theta, time frame, that is what is really in play here, because these options are just out of the money calls, and they've only got 6 trading days to actually perform. So always understand that as well. Folks, have a great day of trading. We're having a great time down here in Dallas. Unbelievable speaker lineup that's incredible, and a great bunch of people that are down here. Really looking forward to the rest of the day. Hope you have a great day of trading as well. I'll see you tomorrow.